Peter Rose, Longwood Currency Trading. It's early February of 2022, and we're outside after another snowstorm that we had. Not too bad. A lot of ice. The other day I talked about had a video out on the mystical pin bar ice trap, right? And basically I was talking about how you can get surprised by pin bars and radical movement. You know, underlying to a pin bar is the fact that you're undergoing some extreme volatility. A volatility is a function of changing momentum, right? And so we have to be careful in describing, you know, when we're talking about trading, saying, well, we need volatility in order to trade. Well, volatility is different than price having momentum to get into a certain place, because volatility implies spiking in one direction and then spiking down in another direction. I don't know, 2, 3, 5 times what the normal ATR might be. I've got some interesting pictures that I'm going to put up now. These are from, I'm filming this on the 10th of February. And so we just had CPI come out, and so here's the 15-minute chart of the CPI reaction. Pretty dramatic, okay? Now, you can't call those pin bars necessarily. It depends on what the price is going to do. Let's take a look at the 5-minute chart here. And you can see how would you trade that? You know, if you were lucky and you got into it and you sat with it and it went above your initial stop and you brought your, I mean, you know, you did the entry thing and it went up and you moved your stop to break even. Come on back here. Then, you know, you could have your stop there and this thing is going to go like a rocket ship, and you could just trail that stop, you know, 6, 8 pips behind and let her rip. And when the reaction comes, and you know the reaction is going to come, as you can see, as you saw on the chart, it spiked way up. I don't know what that pin bar value is, or the movement value is, but it was obviously significant. You can see that on a 5-minute chart. That thing is a ripper. So, you know, when we say that we need volatility to trade, we have to be careful with that, because this is an example of an untradeable situation. If you caught this thing on the third pin bar, on the third momentum candle on that 5-minute chart and went, oh, this would be lovely to get in, by the time that thought process went through you, you'd be at the 4th candle, and you don't know how far that thing is going to go. As you can see where the drop occurred originally, let me put that 5-minute back up. As you can see where the original drop occurred, and then boom, off it goes. You could have been thinking, oh my God, you know, the very positive for, that's a pound-dollar chart, by the way. So it means the dollar is going way up originally, and then at the news, and then everybody decided, whoops, that's not going to be so good for the dollar, and away it goes against the pound. Now I don't know why it would go that far against the pound. Their inflation rate is up, and but not significantly enough, I think, to warrant that disparity. And I don't know what the DAX or the pound index were at the time when this happened. It doesn't really make any difference. You just sit there and you go, holy shit, look at that. Look at what happened. Now, if you're trying to trade that, if you're in there thinking, oh, I'm going to trade the CPI and I'm going to put a buy order 10 pips above where the current price is. I'll put a sell order, so I've got a blanket sandwich order in. So if it goes up, I'll get grabbed. If it goes down, I'll get grabbed. So it goes up and you get grabbed, and then it slams down and you get taken out on the on the sell order because you're not fast enough to get in there. So you know you're very difficult when you're trying to trade the news. And I just had a video today, actually, that I published on on the news, and you just can't trade based on active news. If you would have gone in there and traded on that CPI, the dollar went way up. Originally, maybe that was an anticipatory move on everybody's part. Maybe that was the large institutional traders going in and saying, oh, you know, we're going to take this thing down, we're going to get everybody sucked into going short, and then, whoosh, boy, did they take everybody out. So you really have to be careful around either pair country when they're releasing any kind of news. You just have to be careful, that's all. And the fact of your desire to capture these large moves is a signal of greed at the wrong time. You should approach these markets with fear and just stand on the side and see what happens. At the point where the chart is that I showed you, would you want to start trading? Well, I don't think that you would, simply because there's still way too much uncertainty. What is that 7.5 annualized inflation rate really mean? What does that mean? What's going to happen? What's going to happen is the Fed is going to come in 2 or 3 weeks, and they're going to bump interest rates by 0.5 point. They may have to go 3/4 to combat this. That's the whole thing behind it. So for the dollar to go down so dramatically at this point, when you should understand what the underlying economics are, you see, you can't say, oh, it should do this because this is what's going to happen. Yeah, but that's not what happened right now. You can't trade based on what's going to happen or what you think, or as I've said in the last video, based on your opinion. It isn't worth shit. Look at the chart and see what it's doing. Do you want to be in there? Do you want to take that chance? You know, if you're going for the long pull, you put your bet out, but does that mean that the large institutional traders are not done establishing their setup positions? Maybe that's what that upward movement on that 5-minute chart is going to be. You know, if it comes crashing back down the 1 hour chart, or at least the 4 hour chart, there's going to be a pin bar there of epic proportions, right? Or it could continue up, and somebody will come in and look at the 4 hour chart and say, well, this is a rising market for pound dollar. Will it ultimately be a rising market for pound dollar? I don't, personally, I don't think so. But that's an opinion. But I thought it would be important. I've done pin bars and news, and now we're doing a video on volatility here, kind of clustered together. There's a lot of economic activity going on, both in the United States and in the UK. There's a lot of economic activity going on in the Eurozone based on the conflict with Russia and Belarus and coming into the Ukraine. So you have political issues that are going on that are creating potentially catastrophic economic effects, as I said in the video that I published today, the 10th, that heating oil costs in Europe are going to skyrocket. They say it could go up 50%. Cost for the customer, the cost could go up 50%. If you're on a fixed income, what are you going to do? I mean, in England, and it's cold and it's snowing, and your heat goes up 50%. What are you going to do? These countries are going to be hard pressed not to pass really restrictive economic things, to raise tariffs on it's going to be a mess. So what do you do in these conditions? Do you want to play? Do you want to do the long play? Do you want to go out there and do the long play? Or are you safer in the short term? You know, maybe I can figure out what price is going to do in the next 15 or 30 minutes. I sure have no clue as to what's going to happen in the next 5 days. So you have to be really, really, really careful to watch what's going on here, because the Bo dog is out in the woods. I don't know if you can see him. Hey, Bo, come here. Bo, come. Bo. Bo. Your fans are looking for you, Bo. Bo, come here. There he is. There's the bow dog. All right. He doesn't care. He doesn't care about you. That's it. Don't subscribe to his channel. So I guess I'm presenting a whole lot of problems and I'm not presenting a whole lot of solutions, but there are no solutions to that. The way that you deal with this is your trading plan, which lays out the methodology that you're going to trade under. And then you have rules which execute tactics against specific strategic issues that you identify. And I've said that you can simplify that by looking at the life cycle of a currency position, which involves the entry analysis, the position management, and the exit methodology. And then you answer the what, how, and when questions in each one of those phases. And there may very well be more than one specific issue. For example, in entry analysis, there's probably 4 or 5 issues that you need to look at. And for each one of those issues, you do what, how, and when. Now that sounds like a lot of work. Yeah, but if you were going to replace the rings on your pistons on your engine and you were going to do that on your own, that'd be a lot of work. It's a relatively simple thing if you just go from step 1 to step 2 to step 3, and you're guaranteed some amount of success. And so that's the purpose of your trading plan, because the trading plan has to take into consideration these what you would call anomalies or black swans, which really aren't black swans, and they're not really anomalies. These reactions to NFP or CPI or somebody getting shot or war declared or whatever. Those aren't anomalies. If you're trading at all within a year or maybe a 2-year period of time, you're going to hit about 80% of what you're going to see in the markets. These guys go out and say, oh, well, I learn new stuff every day. No, you don't learn new stuff every day. You look at, what's her name's poem, Trees. Who wrote that? Well, I don't know. But it's a lovely poem. And you read that as a kid. I remember in first or second grade reading that as a kid. And I thought, oh, that's a really nice poem about trees, because I like trees. And then when I got into high school, I had to read it again. I think I was Edna St. Vincent Millay. And then in college, I read it again. Then when I got out of college, I read it again. And each time, the poem didn't change. The meaning didn't change. But my perception of it, my view of it, my interpretation of it, that did change. And my appreciation of it changed with the growth of my understanding of the nature around me and her ability to reflect that within that poem. And so you got to look at the currency markets and your study the same way, so that you simplify the amount of stuff you're dealing with, and then take that stuff, find the real node important points, and figure out a rule to solve the problem. The nodes that you're going to look at, what happened today with this volatility against the CPI, that's a problem. Okay, so does the problem have a solution? It might have 2 or 3 solutions depending on, is this a CPI or is this just some random bank that went berserk? Your trading plan can't identify the tactics of dealing with that stuff. It deals with your view of the markets and how you're going to manage your trading methodology. For example, your trading plan is going to say, I'm a swing trader, I'm a long-term position trader, I'm a scalper, I'm a day trader. And that's what you do. You don't mix those. Your trading plan is going to say, I'm going to deal with 10 currencies, I'm going to deal with 1. That's what your trading plan is for. But it sets out the base groundwork that you build your methodology, your trading methodology from, following through the stages or phases of the life cycle of the position that you're going to be encountering problems with. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.